If you own silver right now, this is not the kind of message you casually scroll past. This is one of those moments where history quietly sets the stage, and only a few people notice what's about to happen. Legendary investor Jim Rogers has issued warnings before that most people ignored, and later wished they hadn't. Today, his perspective on silver is sending a very clear signal. Something big is approaching, and time may be far shorter than most investors realize. For decades, silver has been misunderstood. It's often treated as gold's weaker cousin, something secondary, something you buy, just in case. But history shows that silver doesn't move quietly forever. When it moves violently, and it moves fast. Jim Rogers has repeatedly emphasized that commodities do not creep up slowly when supply tightens and demand explodes. They spike. And silver, right now, is showing many of the same conditions that preceded past explosive moves. Think about the world we're living in today. Governments everywhere are drowning in debt. Central banks continue printing money at unprecedented levels. Inflation is no longer a temporary problem, it's a structural one. Purchasing power is being destroyed slowly, then suddenly. In environments like this, hard assets always matter. And among hard assets, silver has a unique position that most investors still underestimate. Silver is not just a store of value. It's an industrial metal. It's essential for solar panels, electric vehicles, medical equipment, electronics, and emerging technologies that are shaping the next decade. Unlike gold, which mostly sits in vaults, silver gets consumed. Once it's used, much of it is gone forever. That alone changes the entire supply-demand equation. Jim Rogers has often warned that when a commodity is both monetarily important and industrially essential, shortages can arrive without warning. Silver inventories across exchanges have been declining. Mining production has struggled to keep up, and new discoveries are becoming rarer and more expensive. It takes years, sometimes decades, to bring new silver mines online. Demand, however, can rise in months. Here's where the few days left idea becomes important. Markets don't announce their turning points in advance. By the time headlines scream about silver shortages, the price will already have moved. Smart money positions itself before the crowd realizes what's happening. Jim Rogers has always said that the biggest gains go to those who are early, not those who react. Another critical factor is trust. Trust in currencies is eroding. When people lose confidence in paper money, they don't wait for permission to protect themselves. They move into assets that have survived for thousands of years. Silver has been money longer than any modern currency. It doesn't rely on promises, politicians, or policies. It simply exists. Look at historical cycles. Every major financial crisis has been followed by a surge in precious metals. But silver often lags at first. Then suddenly, it outperforms everything else. That's why Jim Rogers has pointed out that silver is not for the impatient. It's for those who understand cycles and are willing to wait until the imbalance becomes impossible to ignore. Right now, silver is still relatively affordable compared to gold. The gold-to-silver ratio remains historically high, suggesting silver is undervalued. When this ratio corrects, silver doesn't inch upward. It explodes upward. Past cycles have shown silver doubling or tripling in very short periods once momentum kicks in. But there's a warning here too. Silver is volatile. Jim Rogers has never sugar-coated that. If you own silver, you must understand that it doesn't move in straight lines. There will be sharp pullbacks, aggressive shakeouts, and moments designed to scare weak hands out of the market. That volatility is not a flaw. It's part of the opportunity. Another reason the clock may be ticking is geopolitical instability. Conflicts, trade wars, sanctions, and global fragmentation are increasing. Supply chains are being reshaped, and commodities are becoming strategic assets. Silver, being critical for green energy and defense technologies, is increasingly viewed as a national resource rather than just a metal. Jim Rogers has often talked about how governments tend to react late. They ignore problems until they become emergencies. By the time policies change to address shortages or inflation, markets have already adjusted. That adjustment is what creates rapid price moves. If silver suddenly becomes recognized as strategically scarce, prices won't politely wait for retail investors to catch up. There's also the psychological side of markets. When silver starts moving, it captures attention quickly because of its low nominal price. Retail investors feel like they're getting in cheap, which fuels momentum even further. This dynamic has played out again and again throughout history. What's coming may not look dramatic at first. It may begin with quiet accumulation, subtle price strength, and increasing physical demand. But once confidence shifts, once fear and urgency enter the picture, silver can become very difficult to obtain at current prices. Dealers run out, premiums rise, paper prices disconnect from physical reality. Jim Rogers has warned repeatedly that when shortages become obvious, it's already too late to prepare calmly. You either own the asset, or you don't. There is no fast-forward button once panic sets in. If you already own silver, the question becomes whether you understand what you're holding. This is not just another trade. This is a hedge against systemic risk, currency debasement, and long-term instability. Selling too early has historically been one of the biggest mistakes silver investors make. If you don't own silver yet, the warning is even clearer. Waiting for confirmation often means paying a much higher price. Markets reward foresight, not hindsight. Jim Rogers has always said he prefers to be early and look wrong than late and be right. This doesn't mean silver will rise tomorrow or next week. It means the conditions for a major move are aligning. And when alignment turns into ignition, the window closes fast. That's why the idea of a few days left isn't necessarily about a calendar. It's about mindset. It's about whether you act before the narrative changes. History never repeats exactly, but it rhymes. And the rhyme playing out now looks very familiar to those who have studied commodities cycles deeply. Massive debt, monetary expansion, geopolitical tension, industrial demand growth, and declining supply. This combination doesn't end quietly. Jim Rogers has spent his life studying these patterns. He has seen bubbles form and collapse. He has seen ignored assets become the most talked about investments in the world. When he expresses concern and urgency around commodities like silver, it's not hype. It's experience speaking. The real alert here is not fear. It's awareness. Silver is not just a metal, it's a signal. A signal about the health of currencies, the stability of systems, and the direction of global economics. When silver starts to assert itself, it's usually because something deeper is breaking. So if you own silver, understand why you own it. If you're considering it, understand what you're stepping into. This is not about chasing price. It's about positioning before the shift becomes obvious. What is coming may surprise many people, but it won't surprise those who paid attention early. The next move in silver could redefine portfolios, expose weaknesses in financial systems, and remind the world why hard assets still matter. This is not financial advice. This is a warning based on history, cycles, and the insights of investors who have seen it all before. The question isn't whether silver will matter again. The question is whether you're prepared before everyone else realizes it already does. Stay alert. Stay informed. And remember, markets rarely give second chances at first prices.